Good morning, everyone. Welcome to another TradingView update. The CPI numbers yesterday came in at expected levels, and that confirmation seems to have allowed for a general risk-on sentiment across equities as well as crypto markets to come back. We've had a very strong rally across the market. Most coins doing pretty well, printing double-digit green returns. So let's dive right in and have a look at where we could be going next. Now, Bitcoin is back above the 0.618 fib retracement level between the July or the June low and the high posted in September. So just this area here. And you'll see as well that these fib levels are actually quite important because they accurately laid out where Bitcoin found ultimate resistance back in November at the 1.618 level before retracing. On the way down, over the course of the last week, we've actually held that level at 0.5, just above 40,850. And we've now made that step up towards the next level. In terms of where we go next, there is a chance that we'll retest this 42.5K, even maybe down to 42K area, just because I think we'll have some sellers coming into the market at this level who weren't willing to sell at 40K, but would be more than happy to sell 10% higher. So just bear that in mind. If we do retrace and successfully hold and start to move higher again, that's when it would be a good confirmation that the bull market wants to continue, that we're ready to move higher, and adding to longs after a successful retest of these levels could be a good move. We're still keeping an eye on this death cross to come. Again, it might trigger some more traditional traders to short the market. And indeed, when we look at the longs versus short that are being placed at the moment, so this is just over the last 15 minutes, we can see that across the major exchanges, a lot of the preference definitely seems to be to the short side. We've not seen any liquidations yet either really take place to the short side. Open interest seems to be growing still every day, and this despite the lack of shorts or the lack of liquidations to the downside. So there is still a pain level that we have yet to reach where people who have been short for some time and expecting the market to go lower will have their liquidation levels in place. And once these levels start to get reached and shorts begin to be liquidated or forced to be liquidated and close their positions, that's when we can expect that rally to really start appreciating and growing in speed. The same way that we have those liquidation cascades to the downside when the market is overstretched with longs and market drops and we start to see those liquidations of long positions or those forced closures of long positions where they become forced sellers. The same is definitely true for the other side as well. And we've not really seen those liquidations on the short side take place yet. The funding rates for Bitcoin, as well as for Ethereum, actually, are still very stretched to the downside. So let me have a quick look at that. Actually, we can see on the funding rates. You can see on this graph how the stretch is, look at that kind of concentration of funding rates favoring the shorts. There still is a lot of a view amongst the shorts that they're either doubling down their positions because the market will move lower. But either way, at some point, we will reach a price level where these sellers become forced buyers. And that's when we'll start to really start to see the rally higher. On the Ethereum side, as well here, we've had the 50-week moving average come in, hold a support, which we identified yesterday. Now above us, we've got the 200-day moving average coming in. So we might encounter some initial support here. We've reclaimed the 0.618 fib retracement level between the May high and the July low. So we'll see if this holds for now. There is a chance, again, as we said, of a retest of 3,200 potentially. If that happens and support holds and we move higher, again, that's another signal that bull market wants to continue, and it might be prudent then to add to long positions. Similarly, on the funding rates and on the liquidations, not really seen those take place yet. So the key, as we move higher, the key is to really keep an eye on those liquidations to see if shorts are slowly starting to become forced buyers. In the meantime, would I be topping up positions now? If you haven't done so already, I would just be a little bit careful. We can, if we look at the very kind of like the 5 minute or the 1 minute chart, even as we move higher, we'll start to see these spikes higher. And you'll recall what I was talking about on the downside. We saw sudden wicks lower as the market was essentially trying to sweep liquidity up. Anyone who was jumping into leverage long positions too soon, especially on the very high leverage, so 20x, 30x, 50x, there's not much room for error. And as those positions get closed, the market is essentially, or the shorts are trying to force a liquidation event and force the market lower. Now, the same was probably true for the upside. So when we see these sort of wicks higher, where people coming in, buying the market long, looking to start that liquidation amongst the shorts, at these levels, if you see the sudden jump, that's not, you don't want to FOMO into those candles, because chances are, if they're unsuccessful, will retrace pretty quickly. So have that patience, wait for those lower support levels to be retested, successfully hold, and that's when we can then really start to look at adding to longs. That's it from us today. We'll be back tomorrow.